Good afternoon, everyone. Welcome. My name is Jeff Johnson with RE Journals, and welcome to Breaking Through the Disruption webinar series. A very special thanks to our partner in today's program, IREM, the Institute of Real Estate Management. Also, RE Journals is bigger than just Minnesota Real Estate Journal and Midwest Real Estate News. We also own a trade journal down in Texas now called Red News. If you're having any issues today with any connection issues, all you have to do is there's a red button on top of your screen here. Just simply click the red button, and that should solve the problem 90% of the time. If you're having any other issues, our preferred method is to use a web browser, Google Chrome. So if you're having any connection problems, just go ahead and copy and paste the link that you got for today's webinar and put it into Google Chrome, and you should not have an issue. All right, and then we are also going to have a chat box off to the right side here if you're on your laptop, or below if you're using an iPad or some other device. As you can see, I was the first one to write a chat in here. So feel free to say welcome and who you are, where you're from, what part of the country you live in. We'd love to hear from all of you. And this is also a great spot to ask the speakers on for questions as they move along their presentation today. Also, we're going to periodically have a couple polls up today, and feel free to answer those polls as we move around along as well too. You can find this webinar in addition to about 45 additional webinars that we've hosted over the last 3 months at rejournals.com/video replay. All right, on with today's program. COVID-19 business insurance claims, strategies, methods for successful recovery. All right, I am going to pull up, hang on one second here. All right, here we go. Here's our presenters for today. We have Neil Novak, Regional Vice President with SIL Company. We also have Mindy Grumbach, Director of Property Management, Hawkins Companies. And finally, we have Bryan Lowe, Director of Corporate Business Development with IREM. All right, it's yours to take away. Neil, I think you're going to kick it off for us.
Okay, I will. Thanks. Hello, everybody. I'm Neil Novak with the Alex SIL Company, and I'm a Regional Vice President with the firm. We are what's known as public insurance adjusters. Our firm is comprised of former insurance company adjusters, accountants, building appraisers, and other experts, including CPAs and lawyers. Essentially, what we do is represent the policyholder in the adjustment of first-party property claims. We're one of the larger firms in the country and been around for since 1928. I haven't been with the firm that long, however, but I've been here for a while. So that's who I am and what we do. Mindy.
Hi, good afternoon, everyone. I am Mindy Grumbach, the Director of Property Management at Hawkins Companies. I've been with Hawkins for about 18 years, in the industry for about 24 years. Hawkins Companies is a commercial real estate developer. We have developed primarily retail, but in addition to that, hotels, offices, apartments, and charter schools. And we do have about a little bit over 4 million square feet in 25 different states. And so as you can imagine, the last 3 months have been very busy. And hopefully I can share some of my experience today with you.
Thanks. And I'm Bryan Lowe. I'm the Director of Corporate Business Development for IREM. And more importantly for today's conversation, I've been engaged in property management for about 25 years, managing condominiums. And prior to this, my big excitement was dealing with insurance claims after 9/11. So this is a very timely conversation. I think there's a lot of dialogue that we've been using, and there's assumptions that we've been running on as property managers. And I think it's really important that Neil is here to help us out with those. Specifically, as we talk about our business insurance policies, Neil, give us some framework for these policies and what we think we have as coverage, and really drill down for interruption versus disruption. I think that's important keywords for us right now.
Yeah, let's get that out of the way first, if we might. Disruption is not an insurance term, so you won't see that in any insurance policy. The term that's used for loss of income, loss of rent, that sort of thing, is business interruption. So there's your difference. Now let's go back to the first part and talk a little bit about the coverage that's afforded under your insurance policy. I'll give the caveat that each of these policies, everything is really unique depending on the language of the policy. It's going to determine whether or not you have coverage in these COVID matters. And that policy language includes not only the insurance, the insuring document itself, but also any state mandatory endorsements that are made part of a policy and are given to a specific location, a specific jurisdiction. The first question that you want to look at in looking at your policy is, does the policy use the language that it will pay for losses resulting from direct physical damage or direct damage? Those are two phrases that are commonly seen, and they really mean there can be a big difference in both those things. Where you see the expression direct physical damage, and you've got a COVID claim, that's the first argument that the insurance company will come up with. They'll say that direct damage or direct physical damage is not there from COVID. So the phrase direct damage is a little bit more ambiguous and gives you a little bit more wiggle room, I guess. Second thing you want to look for is, do you actually have business interruption coverage? Most commercial policies are going to have it, but not all. And you also want to see if the language that's used in the business interruption coverage tracks the language that's in the property portion of the policy. Secondly, if you do have BI, what are your limits? Often we'll see the phrase used, actual loss sustained, so that your claim is payable to the extent that you can prove your economic suffering. And normally that will run out after a 12-month period. So in other words, insurance company, if you do have a business interruption claim, will pay you for your losses up to 12 months. And finally, you have to look at the policy and understand what endorsements or exclusions are there that will disallow coverage for the presence of virus and bacteria. Unfortunately, most policyholders have been stonewalled really by two arguments that we're seeing from the insurance companies. Number one is that COVID-19 does not actually cause the damage that's needed to trigger coverage. And further, that viruses like COVID-19 are excluded anyway. So fortunately for policyholders, the analysis of these things is not always quite as simple as it would appear. The damage that's caused by this has raised tremendous questions. And the battle lines are being drawn right now by insurance companies. But right now there's as many questions as there are answers. Drilling into your policy a little bit, here's a few things that you may look for that may give you some coverage. There's often some commercial policies that have a amount of coverage for communicable disease that leads to a government mandated closure. So there could be coverage afforded there, but most of those policies require that the actual presence of a coronavirus has to be at that location. And of course, that's a tough thing to prove. And we'll talk about that a little bit later. There's a lot of potential disputes in these things. How do you prove to the insurance company, if you do have that coverage, whether the virus is or was present at some time? Did an infected person walk through there? Is any of that sufficient to trigger coverage? We just don't know. So how has that been affected? Again, a lot of questions about this stuff. And if you do have that type of coverage, by the way, there's usually some smaller limits to that type of coverage. Next, we know from the fact that a lot of businesses have been closed and prevented from doing business as a result of order of civil authority, usually stemming from a government or a high-ranking health official. Those type of coverages are found in many policies. If you can show that the presence of coronavirus was nearby, that could possibly give you coverage. But most of that type of policy coverage says that the coronavirus or such has to be within usually a 1 to 5 mile radius of premises. But this whole civil authority issue really has been blown up, because what happens when a governor orders all non-essential businesses in a state to close down? Does that constitute nearby if it's everywhere? So how do you determine that? Probably in a city of dense population, it's a little easier to show that, but that's going to be less cut and dried in rural areas. The policyholder has to remember that all you have to do actually is show the preponderance of evidence that coverage could be. Media reports can help there. Antibody tests, those are many of the facts that could help someone, policyholders, show that more likely than not, coronavirus was present within required distance. Finally, there are state mandatory endorsements. And so even if you don't have communicable disease coverage and with extensions and with contamination exclusions like virus or bacteria, coverage still could be available. Specifically, many policies include state endorsements that take away, remove the word virus from the contamination exclusion. So it's, the policy may take it away with its exclusion, the state mandatory would add it back and their coverage would be afforded. It's not clear why these are popping up here and there, but we have already seen these types of things happening in Louisiana, Indiana, New York, Massachusetts, and there may be other states where that's going to be an avenue that someone could go down. They also, because they're only apply perhaps to some of those states that I just listed, that could create ambiguities in favor of the policyholder in other states. It also could exclude and contradict parts of the main policy. Another avenue could be contingent business interruption. So civil authority is not the only avenue. Contingent business interruption may apply based on damage to suppliers or customers. It's found in many commercial policies, not all. And I think it's probably a very promising avenue for a lot of people. Um, it also incorporates civil authority within that coverage. So you can get coverage in a contingent location, doesn't suffer damage, but is forced to close based on a qualifying civil authority. So there's a lot of questions here, especially with that type of coverage. What exactly is a direct customer in a retail setting, for example? Insurance companies will argue that that's not applicable, but of course, the coverage attorneys and people like that will argue the other way. What happens if you're forced to close your doors regardless of that fact? So again, more questions than answers really at this time, I think. So as losses develop, that it's really incumbent on everyone to keep tabs on all these different avenues rather, and of course continue to cooperate with the insurance company. You want to be careful too, though, that you don't take a position that could undercut yourself later on. So while you want to cooperate with the carriers, you should use generalized language when you do so, and perhaps don't hesitate to bring in an outside expert to give you some guidance, of coverage attorney, public adjuster, or other consultant.
And Neil, can you just briefly share with us, I know that some of us in the urban settings have experienced demonstrations, protesters, rioting, looting, burning. How is that then is that complicating or changing our claims or the whole process now that we're talking about with respect to COVID issues?
No, it really isn't. It's a standalone thing. The good news is that the physical losses and the business interruption that are specific to these riots and protests and so forth, they're likely going to be covered by almost every commercial insurance policy. Naturally, deductibles are going to be applied, and there's some other complications, but in the case where a business loses income because civil authority has ordered them shut down because of rioting and things like that, that type of issue, there could be a waiting period that serves as a deductible. An example of that would be a business that didn't really suffer any damage in the rioting, but was shut down by the local authorities for 10 days. A lot of that type of coverage will have a waiting period. Often we see 48 hours, so that if you in effect were closed and lost income for 10 days, your claim would only be for 8 because that waiting period was served as a deductible.
Thanks. So it's nice to know that there's some delineation between the different events that are taking place these days. Mindy, I know that you've got some great stories in the recent past of losses not related to this issue, but why don't you go ahead and tell us a few of the examples, if you have any, with your everyday business right now, what's going on in terms of any interruption that you've experienced or the companies or your clients have experienced during these times?
Sure. As Neil has said, I mean, obviously we've probably all experienced our offices closing and retail stores around us closing. And as I mentioned, we're primarily retail, although we do have hospitality as well as entertainment and schools, all of which have been affected by this. So I was shaking my head to Neil when he said you have to keep track of all these different avenues. And for us, that meant in 25, 26 different states that we're in, we had to track when states closed, when the businesses were forced to close, if they were forced to close, because some states did not close non-essential businesses, the dates they were closed, the dates that they were allowed to be back open. We had to track it. So, and that's really important because we had tenants not opening for about 3 weeks after the date they were allowed to open. And so that comes in tracking all of these numbers, and even just in the physical conversations with our tenants in regards of asking for rent concessions or abatements. And so there was all of that. And then as Neil talked about, having COVID presence on the property, is that we did have 2 restaurants where 2 employees had tested positive for COVID. So we had to track those as well, and how long they were closed and what they did because of that notice that the CDC had notified us of. And we, Bryan mentions my previous experience, which was a fire in our corporate office. And from that experience, I learned that our brokers, our insurance brokers, need to be on speed dial. And I thank goodness I had them on my phone that night. And I had a conversation with my broker within 24 hours of our first tenant being told they had to close. And it's the same thing. It's having that conversation of, do we have coverage for this? If we don't, and at first it was kind of like, no, you don't. And really nobody does, and explained why, what Neil went into. But then every week we would have further conversations of, you know what, it's probably best that you guys be documenting this. And we started learning what we needed to document, all of these closures and tenant communication, and whether somebody has come down with COVID on or any of our properties. So, and like I said, we've got nightclubs who are still closed because they're still not able to operate under that 200 limit. And like I said, every state's different. And then there's the states that have brought out the different directives, even not necessarily related to insurance, but that every state kind of has a different directive as far as if you're allowed to send a pay or quit or a default if they haven't paid rent. And, there's language in there supporting that the tenant should be talking to us and working things out, not just being silent and not paying rent. So we've had to just track an immense amount of information on the offhand that we have filed claims. We've been told that it's likely they will not be approved, but we should file them and continue to document the information in case one day that coverage is broadened and those would be allowed. I mean, it's better to have it right up front, Neil, I would think, have that information all ready to go instead of having to backtrack into it. So I felt like that was really good advice that we were given at the start and at the beginning.
Absolutely. Good advice. We just, it goes back to what I was saying earlier. We just don't know. This landscape changes almost every day. And so on the surface, it may appear that you don't have coverage. Someday there may be an avenue for you to collect something from somebody, whether it's a change in the status of the insurance companies, if they're forced into it, whether the government steps up, and there's a lot of musings about that. I'll talk about that in a little bit. So you just don't know. So it's important from day one to document everything that you're suffering, regardless of where it's going to get paid. Besides, your accountant will thank you, even if you can't collect.
So, and that's a good, those are good examples. And as we talk about the claims, where you just basically just file the claim and see what happens. And I think, Neil, you've shared with us, and I've heard from a number of different directions, that the insurance company basically, it's deny, deny, deny. I think quoting you, deny, 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 and then deny, which is a great quote, by the way. It's easy to remember. But what about, how do we handle that? And what can we do? How do we prepare for these denials? Are there any options for pushing back? Is there anything we can do? Like you said, maybe there'll be some regulatory changes. Maybe there'll be some governmental involvement later on. But, what do we do with that denial? And how do we move on, especially as owners of the property where our tenants aren't paying us rent? And what are our recourses?
Right. Well, let's, you can, it's a time then to, once it's denied, you pick up a phone and you find a good coverage attorney, because that's really the time for him to step in if it's been denied. When I say a good coverage attorney, let me be a little more specific about that. You want to find an attorney who has experience with first party claims, who has represented policyholders. Not all attorneys, a lot of attorneys get income from representing insurance companies. So a lot of them will have a built-in conflict, but many do not. And there are many firms that have a wide variety of people and practices that are specific to first-party insurance claims. Those are the kind of people that you would want to go to. As far as that kind of brings us up to the government and the courts and things like that, Bryan. There are several state legislatures already that are considering forcing insurance companies to honor COVID claims with so-called retroactive coverage. So there's movements in some of the legislatures that will create a situation that even if an insurance company has an exclusion, very tight language denying these types of claims, they're still going to be forced to pay for them. Now, obviously, the insurance industry is lobbying furiously against that sort of thing. Their argument being, well, first of all, we've never collected any premiums for this, so how can you make us pay it? This is not going to stand. I saw one estimate not too long ago that if the insurance companies in this country were forced to pay every COVID economic damage claim, that the insurance industry would be out of business in about 2 months. And that's probably not an exaggeration. But I think it speaks to the possibility of solutions in the future. And that's probably good news. And that, again, underscores why we tell people, document it, keep it current, because we just don't know how all this is going to shake out. We may see a government established fund that would be administered by the insurance companies or the government itself to pay legitimate claims. Some things that were similar to the Superfund that was set up after the oil spill in the Gulf or for 9/11 victims. Another possibility would be a new market where the risk is shared by both the policyholders, the insurance companies, and the federal government. And finally, from a legislative, regulatory end, we may see a national pandemic program, similar to the National Flood Program that I think you're probably all familiar with. The insurance industry has probably already decided that pandemics are basically uninsurable, and they don't want to touch it, nor do they want to touch floods. And for that same reason, the government set up the National Flood Program years ago, and we may see something like that in the future. We just don't know. From a court perspective, a lot is going on. There are several business entities that are suing insurance companies. I think most notably Thomas Keller, the famous restaurateur in California. He is creating, I think, a class action for restaurateurs to force insurance companies to pay these claims. So there's a lot of that going on. There's litigation already in play. Probably the most important from a court's perspective, about 6 weeks ago, the Pennsylvania Supreme Court found that because COVID is so pervasive that it can be assumed to be anywhere, and therefore it should be treated just like any other national or natural disaster causing direct physical damage. That's going to be a powerful argument against the standard insurance company denial based on that there is no damage here because you have to have direct physical damage, and COVID does not create direct physical damage. So while that's only going to apply in Pennsylvania to give some additional ammunition to the policyholder and their attorneys, over time, it's going to bring a lot of different questions and claims, I think, in other states and other jurisdictions. So stay tuned.
So it is a little too early to see what's going to happen. And Mindy, you shared with us a few examples of what you did as a result. Is there anything, based on what you just shared with us, Neil, is there anything that we can start thinking about doing differently as far as documentation or record keeping, or anything that we can do differently now, assuming that there may be some relief for us in the near future, or maybe if there is some sort of a forced place policy coming out, what can we do differently as property owners and managers to prepare for what might happen? Which is a tough question, I know.
Okay, what do you think, Mindy?
Well,
I'm not a property owner and manager.
No, but well, like I said, I think the advice that we got early on was to document everything, and that what that documentation meant changed every single week. Sometimes every single day it changed. And as we learned more, and as we grasped more, and as we went, oh my gosh, what about this? We included it in our documentation. And one of the things is in our we have a large database. We use Datex, and that is supposed to be an executive dashboard. So everything from our accounting software rolls up to that. And we have put so many notes in that database from the beginning of this. And I sometimes joke, but it's really not funny, but I sometimes joke with my team that, you know, the majority of our job the last 3 months have been completely not our job the previous 18 years, right? Or the 10 years, or however long you've been in this industry. We've done different things. And like I said, that's been constantly evolving. And one of the things in that dashboard that, you know, we always track are what we call the really, really important things, like co-tenancy clauses and uses, and obviously the typical ones like rent and expiration dates. But the tenants that have any type of interruption coverage will now be part of our template as far as entering that information from the lease into the database. So it's a quick look as to who has what and obviously what we have too, but what our tenants have and then what we had. And a lot of that stemmed from the fact that tenants were contacting us going, hey, landlord, we're looking at you to mitigate this. We hope that you file claims with your insurance company. And, you know, and us going back and going, well, you've got some insurance too that might include some of this, so you need to be looking at it too. But the fact of loss of rents or business interruption, all of those clauses will now be part of what we call the lease profile, which basically pulls out any important items from the lease that we can quickly glance at in our software. And they've just become as important, instead of having in these situations to go into every single lease to see what tenants have. And it might not make a difference, you know, to Neil's point, but it might make a difference. So gather it now, document everything now that you could possibly document. Even if you think, I have never been to one of copying myself on a response. And I've done that every day with every single email, and I'm keeping in of whatever it's related to, whether it's a shopping center or insurance or ownership or tenant or whatever it is. I'm just trying to prepare myself the best I can to where if there are some liberties given to where some of this can be collected down the road, that we would be well prepared instead of behind the curve.
And Mindy, is there one of the assets, since you do manage multiple asset classes, is there one of your asset classes where this process has been a little bit easier for you just in terms of what's going on?
Well, obviously retail's been hit the hardest out of all of our asset classes. Our hotels have certainly suffered, but we're actually starting to see pre-COVID numbers as far as occupancy back in our hotels. So I don't think we've suffered. It's been a lot shorter term than what we thought. It's a lot shorter term than what we've been hearing it's going to be. So we're positive about that. We do third-party manage those. So I'm not sure from the property standpoint, somebody being on the property, what that has looked like. I just know that our numbers declined quickly, but we have starting to really gain back towards some of those pre-COVID numbers. I would say entertainment, our theaters are just in most of our states just now getting back open, with some of them not even opening until mid-July. And to have some of these larger theater companies have absolutely zero income, you know, from day one, whereas retail, at least predominantly, our retail was closed about 4 weeks, and you know, our theaters have been closed for now 3 months. And then, like I said, we do have one nightclub in our, and this nightclub is saying we probably won't be open till September, and we certainly aren't going to be able to have any type of name bands that are going to draw the income in under a 250, having to social distance. So if we have to social distance through the winter time, we're looking at possibly not surviving without a lot of help. So I would say that your entertainment, your nightclubs, I know here in Boise, the bars downtown reopened 2 weeks ago, and there are 10 places that have now been named by the CDC of people contracting the COVID virus in those bars. So that would be one of those things that Neil talks about. There's documented cases in those places. 2 of those 10 bars have now closed until further notice. They did not like the fact that somebody contacted in there, and they also felt for their employees. So they've just closed to be determined. And then the other 8 are still open, but they're assuming that those cases will continue the other people will come forward with COVID cases from just the bars being open 2 weeks. So those are all huge concerns, I think, in our industry as managers of those items, those types of properties.
There's a lot of that happening here in Chicago as well. As bars are reopening, you'll see 2 or 3 people, and a lot of people are still really hesitant to get in there. And Neil, I know you touched on earlier about what we're doing and how we're handling our claims as they are being denied. So can you give us a little bit, maybe, is there any specific course that we should follow in handling these denials? I mean, if we just assume that we're going to start dealing with them, what's the best course of action you could tick off the boxes of what we need to do to get ready for handling our denial?
Well, it's sort of interesting. When you submit your claim, don't necessarily expect a denial. Instead, I think what most insurance companies are going to do, and in fact, I've seen it already, they're going to issue what's known as a reservation of rights. It's going to be very finely crafted, real wordsmithing. That they won't deny the claim outright, but they'll put the onus back on the policyholder to present evidence that they do indeed have a valid claim. And at the same time, the insurance company reserves its right to subsequently deny the claim, hence the term reservation of rights letter. That evidence that they require may be in the form of an inspection report or a test report that documents the presence of COVID. As far as I know, there is no test for presence of COVID. So it's a chicken and egg thing, I guess. The virus, of course, dissipates rapidly over time. But I think that it underscores the importance of not waiting to file, because any delay in filing can allow the insurance company to argue that your delay is prejudicial and that you therefore forfeit your right to even make a claim. So you want to, again, as we've been emphasizing, begin this record keeping almost immediately. Most I think will rely that on an employee or a guest contracting COVID, or the argument that COVID is so pervasive that it's everywhere, such as the Pennsylvania Supreme Court alluded to. As Mindy said, you keep track of the exact dates of the shutdown in the state. And every state is going to be different. Every order is going to be different. Sometimes, as we know, these orders have been, halted and reissued, and it's all over the board depending on the state. You'd want to take your normal revenue and expenses to act as a baseline for your income loss, and then you show any changes that have been affected to that. Correspondence from tenants and others that reflect reduced income, rents, contracts, orders, et cetera, et cetera. And of course, obviously, any evidence of exposure to the premises, employees, et cetera.
So, it's not one of the questions we covered in advance, but it sounds like, is there a benefit to knowing that it happened in your space, that you may then get that claim paid sooner? Or is it best to have that plausible deniability that we don't know where the COVID exposure came from?
Ask an attorney. So, or I'll give you my best attorney answer. It depends, right?
Okay, there we go.
Well, I don't know, but my hunch would be that if you can actually show the presence, it's going to up your odds. Okay. So, but this is probably not something you want to do on your own. I mean, filing the claim itself is a pretty simple matter. It's just, notifying the carrier that you've had a loss. You can do that yourself. You can do it through your agent or your broker. But step two, determining if you have coverage, et cetera, might not be something you want to tackle. You may want to talk to a lawyer or a public adjuster or some other consultant who is an expert in policy language. Many of those people would, by the way, review your coverage at no charge. And then if you have coverage, you can pursue that with one of those people. Sometimes when it comes apparent that it's going to end up in the room, you would engage an attorney. Attorneys often will engage us to act as their expert witnesses to calculate the claim and document it and so forth. So very often it's a team approach between the coverage counsel and people like us. And if your claim is denied, obviously you need to get those people involved. And if you get involved and it gets in front of a jury, as we all know, anything can happen.
So, Jeff, those are the questions that we had. I think we might be ready to open our floor up for some questions from our attendees.
Yeah. So actually, I got a question. Neil, do you have any success stories? Kind of any recent success stories of claims that people were denied initially from submittal of a claim during this COVID thing that's been either overturned or appealed in any way possible?
No, it's early for that.
Okay.
There's just nothing. But I do want to add something about, whether or not to seek an expert. When do you involve them? That begs the question. Sooner than later is the pat answer, because obviously you don't want to go in there and compromise your position and then ask somebody for help. So the sooner you bring in an expert, once you recognize that that's probably a smart thing to do, the better you do that.
There was a question about how about interruptions to hotels specifically, even though they have not been deemed non-essential. In other words, with hotels are allowed to open up but are experiencing dramatic demand changes. What is your thoughts and experience in that situation with our hotels? And then as a follow-up question with hotels, maybe they're open and a lot of them have event spaces, and those event spaces are shut down. What options do they have for those event spaces that are different from the sleeping rooms as well too?
Right. Yeah, there's and again, it depends on the coverage. I mean, it really does. I'd have to look at a policy to give a specific answer, but contingent or dependent coverage, which one could have, is designed to do things like that. A great example, I think, is an amusement park. The amusement park shut down. Well, the hotel's almost out of business, isn't it? Because they were so dependent on that particular venue. So, but there is coverage available for that. So, really, to answer a question like that, you really have to see a policy. There's no broad answer for it.
Right. What would if you were going to give everybody that's on the webinar today let's just call it your top 5 tips of what to do today. Number one, if you were denied, what should you do in order to keep the process alive? What would those tips be you would advise people?
The 5 tips would be to document, and document.
Hang on, what was that again?
Yeah, no, I mean, I would just keep at it. It's dogged work, but it could pay off. Even if you're denied a claim, and as I said, you may not get denied right off the bat. You might get that reservation of rights letter that I talked about. Even if you're denied a claim, don't give up, because there could be some avenue beyond insurance that eventually you'll be able to collect. And yet, if you don't do anything, and 2 years from now, the government sets up a fund and says, we're going to pay all these claims, you're out of luck if you haven't been documented. Money's going to fall right off that table if you don't do it. So I believe it's worth the effort, because I think something's going to be done.
Right. Do you think it's going to be done from the national level or state by state level?
I think you might see a little bit of both. And what comes to mind is the hurricane coverage, the wind coverage that's down in Florida. The state literally set up an insurance company to cover wind damage, because what was happening over time, they were hit by so many hurricanes. Insurance companies started to put so many restrictions on what they would pay and limits and so forth. And in some cases, insurers stopped providing coverage. So Florida decided to set up their own wind insurance policy. And so if you have property, in particular geography in Florida, you have to have a wind policy along with your traditional insurance policy. And I think we might see something like that. And it could be federal, like the National Flood Program, or individual states may decide to do something.
So I had another follow-up question. Would you say that it's inevitable that we'll have some sort of class action lawsuits regarding recovery?
Probably. Sure. Given our society, I would expect to see that. Yeah.
Right.
And actually, I had a follow-up question. I mentioned earlier about I'm in Chicago, and immediately following 9/11, I manage a number of condos adjacent to the several, they call them target buildings, the John Hancock, Sears Tower, et cetera. So our buildings were just dropped. They called it as a result of the concentration of risk. So do you see or think that coverage would be dependent upon if you had your crystal ball going forward? Would I have more or less difficulty in Chicago versus Boise in getting maybe my pandemic coverage or those sorts of things?
Yeah, well, it could be. It depend on the state, what the state wants to do. And some states will do things and some won't. So again, it depends. But get back to documentation. Keep track of your losses. You just don't know.
Right. All right. I don't have any other questions. Bryan, do you? Otherwise, maybe we let Neil give any final kind of closing remarks to end us off or finish us off today. What do you think?
I think it's a great idea.
Okay. I want to thank Mindy. It was nice of her to join us, and I want to thank everyone here today for joining us. I hope you found it all very interesting. It is such a changing landscape, and that's the amazing thing to me, that almost every day there's something new. I'm having trouble keeping track of it myself, and so you need to be attuned to it, pay attention. There's a lot of media coverage on it in business journals and things like that, and pay attention to what the legislature is doing, and even in the courts. And it's not unreasonable, I think, to do a little search for a good coverage attorney, because you may need them to pursue those types of claims.
Well, thank you again, everyone. Thank you, Neil. Thank you, Brian. Thank you, Mindy. You're out there somewhere. We lost you. Little technical difficulty. I apologize about that. I guess things happen when you deal with technology. So once again, I appreciate everybody's time today. If you are interested in watching this webinar, it'll be back up on or be up on our website by tomorrow morning. You can watch it at rejournals.com /video replay. And if you have any other questions, this is a phone number to get a hold of myself as well as Mark Menzies from my team. So thank you very much to everyone for joining us today. Thank you again for everyone. And I will be signing off now and look forward to talking to everybody in the near future. Thank you.
Thanks a lot.
Bye-bye.
Bye.